Morning, top of the morning, back at it again with another one. And today, had a cool observation, nothing crazy. We got the FOMC numbers earlier on, nothing out of the ordinary. It came out at 4.5%, as was forecasted. Fed Chair Jerome didn't budge or anything like that, so it is what it is. Going on to the Twitter account real quick, if you don't know, be sure to check us out. That's the handle. Post more things like this if that's what you're into. But today's receipts, you can see there, first setup we had, or the first shot that we took earlier. It was a bit of a volatile session. The entry that we had, it moved in the direction, came back or traded back down. It's a good thing I didn't trail the stop loss because usually I would have opted to de-risk as soon as possible. You'll see when I go on the chart now, but initially I had my stop down there. The entry was, of course, the idea. I wanted to first enter as it came back to like retest the inversion fair value gap over there. That would have been with this candle, but I had my order placed wrongly. I didn't zoom in accurately enough, so that's just something I need to work on and change. But I missed that initial one. As it went up and pushed up, I saw that order block over there, so I had my first buy limit set up on top over there. That's why I got the entry, the first one. The second one, I placed it as well as it to the bottom as it was coming down. And then the third one, I think it was a YOLO buy into this fair value gap over there. But you'll see the execution labels just now to explain. You can see the execution labels over there for the entries and as well as the exit for the TP. But let's just go on to the chart quick, just that I can speak on the setup and then I'll go down to the entry pattern we used, and then I'll just note a few things that I need to remember for myself for later on, just so that I don't make certain mistakes. But then, um, first and foremost, protocol came into play as per expected. Day before, a big three news driver was low probability, nothing crazy there. We tried playing around with like a few entries yesterday just to see what would happen. Not sure if you recall, but like that inversion, hitting it and then taking out these lows. That's just ideal. That paper trade, it ended up hitting the stop loss. You can see it pushed back up since it was low probability yesterday, but it pushed up, came back down. The idea or the expectation on my side was that once the FOMC news drop, we'd go back, re-hit that inversion, and then push down to take out that double bottom. But it ended up acting a bit differently. It took out the double bottom first, and then that's when, of course, I started to notice this here. Price was going down. You saw the candle there, the candle there, and then that inversion opened up, and then we pushed through it. Initially, I thought we'd sell off, but it's not the case. As we know, FOMC is a two-stage um, price action news driver event. So, of course, we have the numbers releasing at 2 p.m. Eastern Standard Time. That's obviously going to bring about its own first set of movement. Then, once the statement drops again at about that's 2:30. Once that drops at 2:30, expect it to move in its actual true direction. So the first manipulation comes at 2 as the news drops. The second one comes at 2:30 once the statements come out, and then it'll end up, or more than likely, it'll target like a clear pool of liquidity or an imbalance or whatever. On our side, we were targeting this level here. You can just see it's too straight. And as you already know by now, that straight edges need to be left jagged. And of course, everything just lined up to justify this bullish movement here. So we took out that strong pool of sell side liquidity from the 4 hourly time frame. Once we took that out, price inverted a fair value gap. We can see that. It then came back down again, hit it the first time, went up, hit it the second time, and then it pushed up to the upside. I must just say, it felt really nice. Like I was around to watch this pump up. It had me a bit shaky, especially when it was printing this movement here. You see this volatility there. It had me feeling a bit uncomfortable. But the main thing is just to accept the risk before the position gets put on, and then fully accept that once the position is on, it's fully out of your hands. The only thing you can actually control is just your stop loss and your TP. But other than that, yeah, the market's gonna do what it's gonna do, so just let it do its thing. But it really felt good, man, like being a part of that move there. Or more so, just being able to see it happen before it came about. The thing that I'm happy about, or where I'm seeing improvement, is the or my ability to put together narrative. So to be able to see where we are currently, um, be able to see where we came from, and then be able to figure out where we are likely to go next. So I feel like the entries, the entries that's locked down, like that's locked down. I'm happy with that. It's just really so figuring out the draws or the target where it'll go, and then just managing the stop loss from there. But you can see here after we took out that pool of sell side liquidity, how bearish PDRAs are being disrespected. Initially, this was as a SIBI, of course, but then you can see we pushed through it, came back, retested, came back up. It's a good thing to note that you see we didn't get a candle closure below the midway point of that fair value gap. Just a good thing to see, or just another small bit of confirmation, just to let us know that we are on the right side and it's moving in its intended direction. Went up, came back, pushed up again further, and yeah, man, took out those highs over there. Those very smooth edges, very smooth edges. You know for sure that there's a lot of stop orders there, especially for people who look to sell. If someone is selling, their stop loss is of course gonna be put there. If someone is looking for a breakout, they put their breakout entry over there, or their buy stop rather, buy stop over there. Their stops would be down here. So it's crazy how it takes out people who are short and then had their stops there by taking them out. Then it also triggers in people who are looking to buy breakouts, triggers them in, and then it went down and ended up closing beneath where they'd have their stops there. So it's just crazy to see how people get taken out in both directions. Early on in the career, I would have been one of the victims, but it just feels good to be on the other side for a change, or more so just to understand why it's doing a certain thing. So that's kind of cool. That's kind of cool. But the main thing that I just really wanted to put down as a note for myself to remember next time is just remember to start first by looking for the setup on the higher time frame, then go to a lower time frame to look for the entry pattern. Don't force an entry pattern just for the sake of forcing an entry pattern. Unless it actually makes sense narrative wise to go a certain direction, the entry pattern is irrelevant. You could have the entry sharp, but then you have the entry in the wrong direction, whereas you don't actually, or you're not getting involved in it within the direction it actually is intending to go. So just keep that in the back of your mind. Of course, take advantage of time. So be it that AM session silver bullet or the PM session silver bullet, either one of the two, just use one of those. And yeah, man, 2R. Don't be crazy with the take profit targets. And above all else, man, stay humble and keep going. Keep going. FOMC was a good one today. Let me just go back to the calendar, sip some tea. Calendar wise, we have unemployment claims numbers tomorrow. It's dropping at 2:30. That's SA Standard Time. Just do the maths and convert it to Eastern Standard Time, and then you'll know what time it is. But hint, hint, it's 8:30 p.m. I mean a.m. Eastern Standard Time. Sorry. So we have unemployment claims tomorrow. There's nothing on Friday, so we'll probably not take any positions on Friday. But tomorrow, we'll of course show up get our station, see what she has to offer us, and then we'll take it from there. Then next week is a bit busy. Okay, not really busy, but nothing on Monday, of course, to let that slide. We have CPI on Tuesday. Then we have PPI numbers on Thursday. Then we have prelim UOM consumer sentiment numbers on Friday. So a bit of a busy one next week, but we'll see what happens. Let's just focus on tomorrow, and then yeah, we'll end off the week on a good one. But otherwise, on my side, stay safe. We'll speak tomorrow, and thank God for the skill.